Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex quick look. Going to take a look at the Aussie versus US dollar and the New Zealand versus US dollar. We're seeing lower prices in trading here today as a result of risk-off sentiment and tensions, geopolitical tensions, and that is leading to a technical shift as well, at least a minor technical shift, a break. So let's take a look at those two currency pairs and talk about it. Looking at the Aussie versus US dollar on the hourly chart, and we had a double top in trading yesterday, or maybe even a triple top up here near the 0.6941 level. The price could not extend above that level as it pushed, but then rotated to the downside. That rotation down to the downside came near this swing area and also started to approach the 100-hour moving average. And trading here today, we saw an additional move down toward that 100-hour moving average and low of this swing area. Found early support buyers against that level, but over the last few hours, we're seeing a rotation to the downside. Geopolitical tensions, U.S. stocks moving lower, all contributing to the risk-off sentiment in the Aussie versus U.S. dollar. That move to the downside did take the price below its 100-hour moving average. As you can see right here, this is a blue line in the chart. Recall from last week, the price did move below that 100-hour moving average, but rotated back to the upside and started to use that moving average as a support right here before moving higher. So if the same pattern exists in trading here today, and oftentimes it does, if the price moves back above the 100-hour moving average, I'd expect to see the sellers turn to buyers and the price to move back to the upside. Now, conversely, we could see sellers against this 100-hour moving average. That often happens, as well as this shift in bias turns more to the downside here in the Aussie versus US dollar. Now, what is keeping the buyers in play are a couple things. One is that the low price today held above this swing area. The swing area is defined by a high price right here, maybe a low price right here, and then low prices through here. So it did find support against that level. Also, the rising 200-hour moving average, that's the green line in this chart, comes in right here at 0.6865. And it would take a move below that level to increase a bearish bias for this pair. The last time the price traded below that level was back here briefly, but more regularly back here when we started to move above that level, came back down, tested that level, and moved to the upside. So it's been a number of weeks that the price has been below the 200-hour moving average as the market trended to the upside. Now that trend is in jeopardy. So getting below that level, again, at 0.6865 would increase the bearish bias for the Aussie versus US dollar trader. So watching the 100 on the top side, watching the 200 on the downside. Let's take a look at the New Zealand versus US dollar again from the same perspective. And when we take a look at this currency pair, like yesterday, we did find a double top up here. These, by the way, are highest levels going back to, for the year. So they are significant. But then we rotated to the downside into the close, which was a bit of a disappointment, and that we couldn't keep above the new record levels, and so the market rotation to the downside was a little bit negative, and then we started to move down, found support near the 100-hour moving average, similar to what we saw in the Aussie versus US dollar. We did dip a little bit below it in this case before rotating to the upside, but then broke below it and used that level as resistance right here before moving to the downside off of this risk-off sentiment. We are now below its 200-hour moving average, which is more bearish for this currency pair. The last time the price traded below the 200-hour moving average is back here, which is, let's see, back on September 16th to be exact. So that keeps the sellers more in control, and staying below that level would keep the bears more in control. On the downside, we are looking toward the 38.2% retracement of the trend move to the upside here. That's the move that took the price above that 200-hour moving average. That 38.2% retracement comes in at 0.62727, which is also near the high of the swing area through here, going down to 0.6266. So getting below both these levels is needed to increase the bearish bias, and then we'll look toward around the 0.6253 level, 50% retracement, and the 100-bar moving average on the 4-hour chart. All of them come in between 0.6253 and 0.6232 on the downside, so that would be the progression to the downside. But right now, the sellers are taking more control below the 200-hour moving average. It would take a move above that 200-hour moving average to deter or to turn around the short-term bias and put the bias more in a neutral position between the 100 and 200-hour moving average. So be aware of that resistance on the top side. Sellers are making a play in both the Aussie and New Zealand versus US dollar. We'll see if they can continue that follow through selling and trading here today. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.